Hello and welcome to REIT Connect, where we decode real estate investment trusts as an investment destination in your diversified portfolio. Let me welcome on the show today Ramesh Nair, who's the CEO at Mindspace Business Parks REIT. Ramesh, always a pleasure to speak to you. Now, my first question, since its inception, how has the traction been for the investors when it comes to REIT investments?
From an Indian point of view, Nisha, right now around 200,000 people have invested in REITs, but it's only a 5-year product in India.
Yes.
If you look at a market like US, where REITs have been around since 1960s,
Yes.
what we know is close to half the households in the US have actually invested in REITs. Today, look at mutual funds. Close to 40 million Indians have invested in mutual funds. So I feel there's a huge opportunity for this 200,000 number to increase.
Right. When we talk about penetration, more acceptability of REITs as a product, and Ramesh, we know that property investment is at the heart of Indian investors and anything which is tax efficient as well. So what do you think are the advantages which will attract more investor participation? And the more sophisticated private equity, sovereign wealth funds, they're already invested in this product. As far as HNIs and retail investors are concerned, what are the advantages for them?
Nisha, 4-5 big advantages. First is volatility.
Yes.
When it doesn't truly reflect the broader market sentiments.
Yes.
So when the market goes up and down like this, you typically see the REIT stocks, it goes up and down like this. So volatility is definitely one. Second is the diversification benefits you get. One needs to stay invested in a product like REIT, which is where you get both the benefits of equity and a debt hybrid kind of a model. Third is the transparency which today the REITs offer, which is phenomenal given all the sponsors we have in India managing those 4 REITs which we have. Next is the tax benefits which investors get. So the dividends you get is tax-free at the unit holders' hands. That's a big benefit again. And lastly, liquidity. You can sell it any moment you want, unlike hard assets, real estate, which you cannot sell. So these are some of the big advantages REITs have to offer, Nisha.
Yes, and also if somebody cannot afford a property with a big ticket investment, it's a very small ticket investment with which you can have an office space investment as well. That could also really be something that the investors could be really interested in.
You could buy 1 unit.
Yes, yes. And what about the risk parameters? Because there are a lot of investors who are risk averse. What do they need to know about REITs?
So I would classify the overall risk into 3 buckets. You have the leverage risk, you have the market risk, and you have the growth risk. From a growth risk point of view, our REIT market is obviously dependent on the overall demand supply of commercial real estate. How, what are the competition doing? How much of new supply is coming? Government regulations? How are GCCs doing? How are the IT services companies doing? So all that is the market and growth related, again connected to global economy, Indian economy. It has that bit of correlation to those. On the leverage part, tomorrow when the refinancing comes in an environment where interest rates are going up, if one doesn't have their interest rates under control, that could have a negative risk again on your REIT prices.
Right. So these are some of those macro as well as micro factors. But, you know, Ramesh, there are several questions that investors want to understand about this fairly newer product. Right. So let me address one of those questions. Like, you have cash generated being distributed to the investors. So that cash component is involved. But what about the operations as well as the growth avenues for a REIT like yourself? Where do you get the money and the cash to generate more growth potential for the future?
So as per SEBI guidelines, a REIT is mandated to distribute 90% of its net distributable cash flows to the unit holders. Which means we need to depend on the capital markets for our operating a REIT or growing the REIT. So on the capital market side, both debt and equity is something we
Yes.
need to rely on. The debt side, whether it's a commercial paper, whether it's NCDs, whether it's term loans, and on the equity side, doing preferential allotments, institutional placements, or rights issues. So these are the different ways we approach capital markets for operating and growing REITs.
All right. So being present in the capital markets gives you many avenues for raising future funds for the growth potential of the company. My final question to you would be that if you really look at this, property investment, now there are stocks available and they're listed companies from the real estate space. Compare that to REIT. How would you differentiate between the two, and what is the advantage that REIT offers?
So 3-4 things again, Nisha, there. One is we are structured as a business trust,
Yes.
Unlike a listed real estate company. Second, one needs to make sure our LTVs don't cross the 49% mark. We also need to, like I said earlier on, distribute 90% of the NDCF back
Yes.
to investors. So these are some of the big things. Again, 80%
Yes.
of the assets should either be completed or income generating. So it again protects broader investor interests.
All right. So many things to look at when it comes to advantages of REIT investment. Thank you so much, Ramesh Nair, for explaining that to us and to our viewers about the potential of REIT investments in the country. Thank you. With that, we'll slip into a short breather on the show.